Yeah, so David, just picking up on your comment here about the counterintuitive action that was seen as gold should have naturally risen above 2000 into these. I mean, we're talking about a geopolitical situation that's starving commodities from the market. It's starving gold. It's starving silver. We're seeing Russia using gold as a means of escaping or means of transiting through some of these sanctions. And I did something just a little while ago about this on World War III is being played out in the gold market. And of course, World War III is not going to be fought with physical weapons. It of course has to happen. And the only one area where you can see now countries are looking at what happened, freezing the assets of a central bank, cutting them off SWIFT. You know, this has the attention of every central bank out there. And as far as the gold market, you've just talked about this counterintuitive action, which it certainly is, given the fact that we see from a wholesale market perspective, incredibly tight supply. In fact, with Kazakhstan recently, just this on Friday, or I think it was late last week, cutting off, withholding 500 tons of physical gold from the marketplace. Now, that's not at the margin. I mean, this is even at the margin. The paper to physical gold equation is pretty dicey. I mean, you only have to cut off a little bit of physical supply for this inverted pyramid to start to collapse. But 500 tons, what they're doing is what every other central bank is doing, is thinking, hey, we better repatriate, we better take control. Look what happened. It could happen to anybody. And China is doing the same thing. So it's really interesting that you mentioned that. And are you seeing anything from your side of the pitch?
Well, I'm not watching the gold market quite as closely as I used to because I'm working on a documentary right now. And certainly you are the guy that follows, every, squiggle and in the gold market. I'm following the miners, and the miners are, as I said, a derivative play to the gold price. But what we saw with geopolitical, which I'm watching closely, and where we are with Russia and the Ukraine, and looking at inflation, and where we are on rates, and these are astounding times, and we just have every confidence that these miners are going to go up a lot. And we, frankly, have been a big fan of physical gold and physical silver versus paper gold and paper silver. And we saw this decline that happened recently was all in the paper market. So that's what's going on. The paper market has been driving the price down, but that's not going to last forever.
Yeah, absolutely. And I think this is what staggers us really, and all of us who understand the gold market, is that to fight a physical price that is rising, a stair-step physical price that is rising based on real true supply demand fundamentals, to fight that with paper gold is an own gold. It's an own goal, because what that's doing is reopening the gold window that Nixon closed 50 years ago. And after all, and if I've got this right, David, didn't Powell the other day, wasn't he screaming stagflation? Was this not what is on the front burner? Isn't that what triggered the gold window to be shut in 1971, stagflation?
Well, exactly, and I think we are facing that today. I mean, now the talk has moved away from transitory inflation, and now we, crept up to 8%, and now we have the price of oil that's going to ripple through, prices, and so we see airline prices up a lot. I've been making reservations lately, and I'm astounded about how much higher they've gone.
So that's obviously affecting your managing your decisions to manage your assets, obviously.
Exactly.
The other thing that pops up, and I'd like your thoughts on this too, is that quite clearly, although we have no absolute proof of this, but it is credible, very, very credible, the sources we're getting it from, is that there is, for very cheap, discounted Russian oil, there is an oil for gold trade beginning. It's the thin end of the wedge. And I think it's inevitable. I think 5 to 10 years from now, something was going to happen. It was going to happen anyway, but I think it's been brought to the front burner. But I think, I guess really what I'm trying to say here is that if we see the physical gold being swapped for oil, that's going to completely destroy the paper market, because you cannot swap a paper gold credit position for a physical asset.
That makes a lot of sense. And certainly we've seen talk just in the last couple of weeks about in the oil market as far as purchases for renminbi. The Saudis have somewhat, given Americans a cold shoulder lately. It looks like they're sidling up closer and closer to the Chinese. We know the Chinese and the Russians cannot stand our status as world's reserve currency status, and are essentially taking positions to move the global economy away from that. This is an extraordinary time, and here we're in a time where we have these negative real rates. I mean, how can that, attract people to the U.S. dollar being the world's reserve currency? And then also it's been our aircraft carriers and our defense position that's made global nations to be okay with the U.S. dollar, but certainly we're not defending